Hi, welcome to this SAP FICO training video. Today we are focusing on product costing. Within product costing, we're focusing on product cost planning. Today's date is December the 11th, 2024. This is based on SAP S4HANA. And without further delay, let's get into it. If these videos are helping you on your SAP FICO training journey, please like, subscribe, share, and drop a comment in the chat. Let me know how many years of SAP FICO experience you have. On the agenda for today is costing variance components, creating the costing variant, cost components structure, costing sheet, material cost estimates. And as the introduction here, just to let you know, we will create a material cost estimate to provide the planned standard price. What does product costing cost planning provide? Plan prices for the materials the company produces and purchases. What are plan prices used for? As a basis to value inventory and recognize price differences with the actual prices incurred. What is product cost planning based on? A costing variance that determines what costs are included. All right, costing variance components. What does the costing variance determine? How manufacturing costs are evaluated and which master data objects are included for calculation of the standard price. What components can be combined in a costing variant? Costing type, valuation variant, quantity structure control, transfer control, reference variant. Costing type. What does a costing type define? The use of calculation. Let's define a costing type. Menu path to define a costing type. Controlling, product cost planning, material cost estimate with quantity structure, costing variant components, define costing types. These are the defined costing types. We will use a standard costing type for this example. Double-click O1. The settings of a costing type are divided into three tabs as shown here. Let's walk through the tabs. The price update field lists the field in the material master where the calculated price will be updated. Other price fields can be used in the material master besides 1. Standard price. Other options include price and commercial price. In the valuation view field, select the type of valuation to be used in case of parallel valuation. Click the Save Parameters tab. Here, you will define if you want to save the date information related to calculation in the cost estimates with quantity structure and additive cost estimates fields. We recommend setting both options with date information. Click the Miscellaneous tab. In the cost portion for overhead application field, you will define which cost elements serve as a basis for the calculation of the overhead costs. In the partner cost component splits field, you will define which characteristics such as company code or profit center will be saved in the cost estimate for further analysis. Valuation variant. What does a valuation variance define? The valuation settings for the cost calculation. Let's define a valuation variance. Menu path to define a valuation variant. Controlling, product cost planning, material cost estimate with quantity structure, costing variant, components, define valuation variance. This is a list of defined valuation variants. Plenty of standard valuation variants are available that cover different types of valuation concepts. You can use these standard valuation variants or create your own in the custom name range. Let's review the settings behind the valuation variant. Double-click Variant 001. The settings are organized into 6 tabs. Under the first tab, you define which prices to use for material valuation. You can enter up to 5 types of prices and thus build a strategy. The system will first try to find the price specified in the priority 1 field. If the price is not maintained in the material master, the system will look at the second priority, then the third, and so on. If the system does not find a price at all, an error in the costing calculation will be thrown. Click the Activity Types Processes tab. Here you define the strategy sequence for price determination of the activity types. You can provide up to 3 priorities for pricing. In the CO version plan/actual field, specify the version the activity prices will be stored in. Click the Subcontracting tab. Here, you can define the strategy sequence for price determination for subcontracting. You can provide up to 3 priorities such as net quotation price, gross purchase order price, and so on. Subcontracting is a process where you deliver one or more components to a subcontractor who manufactures the final product and returns it to you. The materials are your property during the subcontracting process. Costs are incurred during this process, which must be included in the costing calculation. Click the External Processing tab. Here, you define the strategy sequence for price determination for the valuation of externally processed operations. To calculate the costs of internal processing, externally processed operations are evaluated with the prices specified in this tab. Options available to determine the price are net quotation, price, price from the purchasing info record, net order price from the purchase order, price from operation. Click the Overheads tab. Here, you define how overhead rates apply to the cost estimate by entering costing sheet and the valuation variant. We have assigned the costing sheet standard for finished and semi-finished materials. We will configure a costing sheet at the end of this video. Click the Miscellaneous tab. Here, you can assign price factors. Price factors are used to multiply single line items by a certain amount. Price factors could be used for inventory valuations for tax purposes. Quantity structure control. What does a quantity structure control define? How to search for the bill of materials and the routing included in the cost calculation. Let's define a quantity structure control. Menu paths to define a quantity structure control. Controlling, product cost planning, material cost estimate with quantity structure, costing variant components, define quantity structure control. Here, you see a list of the controls defined. You can click New Entries to create a new control. You can click Select an existing entry, then click Copy. Double-click PC01. In the BOM tab, you define the BOM determinations. Several BOM applications exist. BOMs for production, BOMs for sales, costing BOMs. In this tab, you select which application should be used for the costing calculation. Click the Routings tab. Here, you define how routings should be determined in the cost calculation. Transfer control. What does a transfer control ensure? that when a cost estimate already exists, that estimate will be transferred instead of creating a new one. Let's define a transfer control. Menu path to define a transfer control. Controlling, product cost planning, material cost estimate with quantity structure, costing variant components, define transfer control. This is a list of transfer controls already defined. You can create a new one with the new entries option. You can copy an existing entry. Double click PC01 to review the possible settings. In the single plant tab, you can set up 2, 3 strategies. The system will search for the first appropriate calculation. If no cost estimate is found, the system will check the next priority and so on. If you activate the fiscal year indicator, the system will only search for cost estimates in the current fiscal year. The periods field will allow you to specify how many months in the past the system should check for a suitable calculation. Click the Cross Plant tab. Here, you can maintain a strategy sequence if you work with special procurement keys. The system will search for allocations from other sources according to the special procurement key. The special procurement key is part of the material master record and determines if material is procured externally or produced in-house. Reference variant. What does a reference variant enable you to do? Create cost estimates based on the same quantity structure. Let's define a reference variant. Menu path to define a reference variant. No variant exists initially, so click New Entries. Enter a name and description of the variant. In the Cost Estimate Reference tab, you can define the strategy for how to transfer an existing cost estimate. Click the Revaluation tab. Here, you define which components should be recalculated and which should remain the same from the original cost estimate. Components selected in this tab will be revaluated. Click the Miscellaneous tab. If you select the if you transfer additive cost tab box, you can specify that additive costs also should be transferred when creating a cost estimate with a reference. Click the Broken Value Chains tab. Here, you can check for special procurement keys in the Material Master to prevent a broken value chain when costing across company codes. Select the Special Procurement Stock Transfer checkbox so when the system costs a raw material, it will look for a special procurement key in the master data. Click Save. That concludes costing variance components. Now, let's cover creating the costing variance in product cost planning or product costing. Creating the costing variance. We just configured the components that are part of a costing variant. Now, let's create the costing variant itself. Menu path to create the costing variant. Controlling, product cost planning, material cost estimate with quantity structure, define costing variance. This is a list of costing variants already defined. You can create new variants by clicking New Entries or by copying an existing entry. Click PPC1 to review the settings. This is a standard costing variant provided by SAP. In the Control tab, you will assign the various costing variant components which we defined in the previous steps. Click the Quantity Structure tab to define the related settings. Pass on lot size. This guy. determines if the system will determine the size, defines if the system will determine the costing lot size of the highest material in the BOM. Ignore product cost estimates without quantity structures. If you select this checkbox, all costing estimates without quantity structures will be ignored. Transfer control can be changed. If you select this checkbox, you can manually enter the transfer control parameters for existing costing data. Transfer active standard cost estimate if material costed with errors. Defines the active standard cost estimate is used to continue costing when errors occur. Click the Additive Costs tab. Here, you define if additive costs should be considered in the cost estimate. If you select the Include Additive Costs with Stock Transfers checkbox, additive costs also will be considered during transfer of a material from a different plant. Click the Update tab to define settings related to saving the cost estimate. Savings allowed enables saving of the cost estimate. Save error log enables the saving of the error log during calculation. Defaults can be changed by user. If you select this checkbox, you can change the save parameters during the calculation of the cost estimate. Itemization. If you select this checkbox, the itemization also is saved to the cost component split. We recommend selecting this indicator for better information reporting. Click the Assignments tab to define several related settings. Cost component structure defines the costing structure by organizing the separate components where costing is divided, such as labor, material, etc. Double-clicking this button will let you see/modify the assigned cost component structures per company code. Costing version. You can perform different costing calculations for the same material. Cost component split in the controlling area currency. With this option, you can perform the calculation in the controlling area currency in addition to the company code currency. Cross-company costing. Activate this option if you want to perform cross-company code cost calculations. Click the Miscellaneous tab to define if the error log should be saved when running the cost estimate and if it should automatically be sent to existing SAP users. That concludes creating the costing variant. Now, let's cover cost component structure and product cost planning for product costing. Cost component structure. What does a cost component structure define? How the results of material cost estimates are updated. What does a cost component structure? The cost for individual materials into cost components. What are some examples of cost component structures? Material costs, overhead, internal activities, external activities. Let's define a cost component structure. Menu to define a cost component structure. On the right is a list of cost component structures already defined. On the left, you can configure various functions related to cost component structure. Normally, you would create your own cost component structure and make its name start with Y or Z so it's not deleted during updates and upgrades. Select Y1. Click Cost Components with Attributes on the left. These are defined cost components for cost component structure Y1. 10 components are defined, which represent the main types of cost related to manufacturing and selling a product. The number of cost components that can be defined is limited to 120, but used to be 40 in older releases. Double-click a cost component structure to see the detailed configuration screen for that cost component. Here, you will configure which types of costs should be included, their relevance for inventory valuation, transfer price surcharge, tax inventory, and other settings. If you select the roll-up cost component indicator, the costing results of a cost component will be rolled up into the next highest costing level. Click Assignment, Cost Component, Cost Element level on the left. Assign cost elements to the cost component. These assignments are made on the chart of accounts level. You can also use the origin group field as a restriction criterion so that the same cost elements are assigned to different cost components based on a different origin group. This feature enables you to post to the same cost elements, but to allocate certain costs to different parts of the cost component structure. Click Update of Additive Costs on the left. This shows the configuration screen for additive costs. Here, you assign the relevant cost elements to the cost components. This assignment is on the chart of accounts level. Click Cost Component Views on the left. You can build cost component views here, which can include one or more of the cost components. Double-click a view to see/maintain its components. Here, you can see and maintain the selected view's components. Click Assignment, Organizational Units on the left. Here, you assign a cost component structure to a company code and specify its validity dates. You can also refine these settings for each plant costing variant. Click Save. That concludes cost component structure. Now, let's cover the costing sheet in product cost planning for product costing. Costing sheet. Why is there a need to define a costing sheet? For the allocation of overhead costs in the product costing. What three elements does a costing sheet consist of? Calculation basis, overhead rates, and credits. How do you define how overhead costs should be allocated to products? Using the three costing sheet elements. Calculation basis. What do calculation basis define? The cost elements that overhead costs are posted to. How can calculation basis be defined? Individual cost elements, cost element interval, cost element group. Let's define calculation basis. Menu path to define calculation basis. This is a list of calculation basis already defined. These calculation bases correspond to different types of overhead costs. Select B001, click Details on the left. Enter the controlling area, enter the range of cost elements that the overhead costs for wages will post to. They will be included in this base in the costing sheet calculation. Using this logic, define your overhead bases and assign the respective cost elements. Overhead rates. What is an overhead rate? The total of indirect costs for a specific reporting period divided by an allocation measure. What do overhead rates define? The rate the overhead will be applied to a product. Overhead rates define the conditions based on which overhead is applied. What are two types of overhead rates? Percentage rates, defined as percentages to be applied, and quantity-based rates, depend on the underlying quantity. Let's define percentage overhead rates. Menu path to define percentage overhead rates. These are the defined overhead rates along with their dependencies. A dependency defines which characteristics and organizational elements are available for the definition of the surcharge. These standard overhead rates are delivered by SAP, but you can define your own if needed. Select C000. Click Details on the left. You can define the overhead percentage rates and their validity dates. Three types of overhead rates can be defined in the overhead type field. 1. Actual overhead rate. 2. Planned overhead rate. 3. Commitment overhead rate. The overhead type defines the types of costs that are being allocated. Often, new overhead rates are maintained each year with new validity periods. Let's define quantity-based overhead rates. Menu path to define quantity-based overhead rates. Here, you see overhead quantity rates already defined along with their dependencies. Select C100. Click Details on the left. Click New Entries. Here, you maintain the rates. Enter the amounts that depend on quantities. In this example, 10 USD per material is defined. Credits. What do credits define? Account assignment objects such as cost elements and cost centers, which are posted during the costing calculation. Let's define credits. Menu path to define credits. Here, you see a list of credits already defined. Select EO1. Click Details on the left. Click New Entries. Enter a controlling area. Here, you maintain the assignments. This is an example of how you can assign cost elements and cost objects to the credit key. The cost element should be a secondary cost element with category 41. Costing sheets. What is a prerequisite to defining a costing sheet? First, define the calculation basis, overhead rates, credits. What does the costing sheet combine? Calculation basis, overhead rates, credits. Let's define costing sheets. Menu paths to define costing sheets. This is a list of costing sheets already defined. Select Costing Sheet PPPC1. Click Costing Sheet Rows on the left. These are the details of the costing sheet. In different rows, the bases you defined earlier are assigned. The overhead rates are credits. The overhead rates and credits refer to the rows with the bases. In the base, overhead rate and credit sections on the left, you can see modify the relevant details. We have finished the configuration for overhead calculation through the costing sheet. That concludes the costing sheet. Now, let's cover material cost estimates in product cost planning for product costing. Material cost estimates. What does the product calculation process create? A material cost estimate, which calculates material cost estimate be created in a costing run for an individual material or for multiple materials. Let's create a material cost estimate for one material. Menu path to create a material cost estimate. Enter a material and plant to be costed. Select a costing variant. Optionally, specify a costing lot size, which serves as a basis to determine the costing quantity. Optionally, enter a transfer control, which controls how the system should search for existing cost estimates. In the Dates tab, specify a costing date, quantity structure, and valuation date. In the Quantity Structure tab, enter the bill of material and routing data related to the cost estimate. You can also create costing estimates for multiple materials through a costing run. Usually in the beginning of the year, companies run a costing run to cost all relevant materials and determine the standard prices. Let's create a costing run. Menu path to create a costing run. Click the Create button to create a new costing run. Enter a name, date, and description for the costing run. In the Costing Data tab, select the costing variance we created earlier along with costing version, controlling area, company code, and transfer control. Click Save. In the lower section of the screen, enter the Materials selections. Click the arrow button in the selection row. Here, you can select materials and make further restrictions. Green arrow back. The costing row creates the material cost estimates for the selected materials. In the analysis row, you can review the material cost estimates. The marking row updates the calculated cost estimate in the material master as a future standard cost. The release row makes the future standard cost a current cost estimate, and the current cost estimate becomes the previous cost estimate. Then existing inventory is revalued at the new standard cost, and the difference caused by the revaluation is posted as a finance document. That concludes material cost estimates and this training video. That was a big one. So if these SAP FICO training videos are helping you on your SAP FICO training journey, please like, subscribe, share, and drop a comment in the chat. Let me know how many years of SAP FICO experience you have. Thank you all for your time. As always, till next time, peace.